Futures trading is a way for you to make money whether the market is going down or whether the market is going up. A lot of people lose money in futures trading because they have not understood the basics. What I want to do in this video is to simplify futures trading, making clear all you need to know. Then I will show you one strategy you can use to make money trading futures. I explained the concept of futures. That is how futures trading originated in a video I did a year ago. Futures is an agreement to buy or sell an asset at a set price at a predetermined date in the future. You should watch that video. It will help you. If this video is like reading a book, then that video is like learning the ABCs that will help you know the words. I'll leave a link to that video in the description. To do justice to this video, I will start by stating the two types of futures trading there are, which will lead us to definition of terms. Then I'll walk you through the futures trade room of Bybit to show you how to place trade and what everything written there means. And finally, one strategy you can use to rake in profits when trading futures. Now, Bybit is one of the top cryptocurrency futures trading platforms. I'll leave a link in the description for you to sign up. Make sure you use that link to sign up. You can always ask me questions in the comment section. I will never leave my contact in the comment section. You can only find it in the description box. Beware of scammers and impersonators in the comment section. That said, let's get into this video proper. Futures contract is an agreement to buy or sell an asset at a date in the future. When the date is fixed, we say the contract has an expiry date and we call it futures contract. When the date is indefinite, we call it perpetual futures contract. If you don't understand this, then watch my first video or just know that we have futures contract and perpetual futures contract. What I'll be talking about in this video is a perpetual futures contract, but I'll be using the term futures for ease. Note that futures is a type of derivative trading. So some exchanges call it derivative trading. Derivative is a type of trading where you are not buying the actual assets, but betting on the price movement of the assets. In Bitcoin spot trading, I am buying and selling the actual Bitcoin. But in Bitcoin derivative trading, I am using USDT to bet on the price movement of Bitcoin. The term you must know when trading futures include long, short, leverage, liquidation, TP and SL, and funding. Let me take them one after the other. In futures trading, you can either take a long position or a short position. When you take a long position, you are predicting that the market is going to go up. If the market goes up, you make profits. If it goes down, you are making a loss. For short position, you are predicting that the market is going to go down. If it goes down, you are in profit. If it goes up, you are losing. Leverage is trading with more money than you have. That is, you borrowed more to add to what you have with the intention of maximizing your profit. Let me throw more light here. Let's say your trading capital is $50 and you take a leverage of 10x. Your capital will be increased by 50 times x, which is $500. That is $50, which is your own money, and $450, which is the money you borrowed. So if you close your trade at a profit of 5%, your take home will be 5% of 500, which is $25. But hold on here. If you make a loss of 5%, you will also lose $25 instead of $5. So you don't make a loss. You have to learn how to trade futures profitably, and I'll get to that. Liquidation occurs when your loss exceeds your initial capital, the one without leverage. Still using my initial example to explain this. My initial capital is $50, but I took a leverage to make it $500. If my trade is at a loss of 5%, I am already losing $25. If I don't close this trade, I have not lost because the market can reverse and I will be in profit. But if my trade gets to a loss of 10%, that is a loss of $50, which is my initial capital. At this point, my trade will close because I have lost all my money. This is liquidation. Now, your exchange will notify you before liquidation. You can either top up your account or set up a stop loss to avoid liquidation. TP and SS stands for take profit and stop loss. Stop loss is used to stop liquidation. I can use it to close my trade. Maybe I am at a loss of say $10 if I'm still using the other example. This will stop my trade from getting liquidated. Take profit is used to close my trading profits. I could set it that when I have made $25, it will close my trade. I can actually close my trade manually, but we set take profit and stop loss so that they happen automatically even if we are not there. So I can be sleeping and my trade gets to say 50% profit and I did not set TP. By the time I wake up, it must have gone down to say 5%. So I've lost in that trade. Does that make sense? A lot of people don't talk about funding, but it is very important. Here's what it is. Funding are fees paid either by the long traders to the short traders or by the short traders to the long traders, depending on the condition of the market. So I can receive funding fee or pay funding fee depending on the condition of the market, irrespective of if I am going long or going short. Let me throw more light here. The futures market tracks the price of the spot market. When there is a difference in the price of the spot market and the futures market, we'll call this divergence. When the futures price is higher than the market price, it is a positive divergence and the long traders pay funding to the short traders. When the futures price is lower than the market price, it is called a negative divergence and the short traders pay funding to the long traders. Funding fees is a way to make sure that the futures price continuously tracks the spot price. Funding in most exchanges is calculated every 8 hours. It is not paid to the exchange but to the traders. It is important because when calculating your profits, you have to factor in funding. Now, let me walk you through the futures trade room on Bybit. Okay, now this is Bybit, and to get to the futures trade room, you can see derivative down here. You click on it, that takes us to the futures trade room. Now, the market is ETH USDT. I can always change this market to what I want. Let's say I want to change it to a Bitcoin USDT. I'll click on that ETH USDT. Then I can search for BTC USDT, and I'm now in this market. Now, if you go here, so you have the chart, which is this, and you have a trade room, chart, trade room. So stay in trade room. Now you also have chart when you click on this candlestick here. Now if you go down below the BTC USDT, you can see cross 10x. Now cross is when you are trading with all the money in your futures account, while isolated is trading with only the money you put into the trade. And this is where you set your leverage. The first one is leverage for long, the second one is leverage for short. I can now save if I want. Below that, you now have open and close. This is where I place my order, right? So I can click on limit. These are market orders. If I want to start the trade immediately, I click on market, enter the amount in USDT. Then I can set my take profit and stop loss here by clicking on it after I've entered the amount. Then I click on long or short, depending on where I want to go. Now this right hand side, the column here is just showing us the order book. You can also see here, you can see funding rate and countdown. You can see the funding rate now is minus 0.0025, which means that those taking short position are paying funding to those that took long position. And I say it's calculated every 8 hours. You can see it's 3 hours, 38, and it's counting down. So after that, funding is calculated and paid out, or charged, whichever. Now if I click on this chart here, you can now see the BTC USDT chart. So we can look at charts and conduct our analysis and all that. So this is really simple. To set alarm here, alert here. Maybe I set take profit or stop loss, and when it happens, I can set an alert and I'll receive an alert when this happens. So again, I click on long here. It takes me back to the trade room. I've explained everything in this trade room. So once I place a trade, it will appear here. Now the next thing is to show you the strategy you can use to trade futures profitably. To do that, we're going to look at three things. We'll look at the market, we'll look at the candlestick pattern, then an indicator. Once these things find confluence, they rhyme, then we can now buy at a certain point or sell at a certain point. The key thing here is that let the trade come to you. Don't go for the trade. Now, for the market can be ranging or trending. A ranging market goes sideways, while a trending market either goes up or goes down. The next is candlesticks. Candlesticks tells us stories. If you understand them, you can trade profitably. There are three candlestick patterns we're going to use in this video. One is the bullish engulfing candlestick pattern. Two is the bullish PM bar, which we call the hammer. Three is the doji. Now, depending on the market and where they occur, we can have a signal to either buy or sell. But before we do that, we also have to find confluence with an indicator. Now, let me go to Bybit and show you how you can do this. So if we go to derivative down here, the market I want to show you is the Atom USDT market. So we'll click on this BTC USDT here and then search for Atom. So this is the Atom USDT market. Now look at something. You can see this section here is trending up. This section is trending down, and here is more like ranging. And what we're using here is a 1 day time frame. Now, if you look at this section, supposing you saw this market when it started trending up, how can you trade it? If you click here where it shows the pencil, you click it, and I want to draw. Now you can see that here, this is the pin bar, right? You see another pin bar here, you see a doji here, you see an engulfing candlestick pattern, you see another engulfing candlestick pattern. Now these are signals. These are bullish engulfing, and these are signals for you to buy. Now this market is trending up. Let's also draw a trend line to show that it's trending up. So if I take this arrow here and I draw this, and I position it from the beginning, and I draw it up to this point, you can see that this market has been trending upwards. Now look at it. Each time it goes up from the beginning, it came down, it retraces, it goes up again, it retraces, it goes up again, it retraces. So say it did the first one, came down, did the second one, came down. We see after the second one goes up, we can establish that this is a trending market. Then we can now draw our trend line and just wait for it to come back to that trend line. So if you look at this, say we draw this thing this way, say this first two happened, this first one happened, the second one, the third one, I will now draw the trend line this way. You can see that each time it comes here, look at this hammer, it goes up again. So if the second one, if I was using a laptop, this would have been more better, but I'm just trying to use the phone today to show you can also deal with the phone. Now you can see this is a doji, right? So this came and came down, so immediately the doji formed. After the doji formed, and you know it's already happening this way, you can just place your trade around this point, right? Immediately after the doji formed, you can place your trade at this point, and then put your stop loss at the bottom of the doji. So after the doji formed, you can place your trade here. Supposing you're taking this from here, this is where the doji ended, right? After the doji formed, this is where the second candlestick pattern started. So you can place your trade at 9.221, right? Put your stop loss here at 8.584, then put your take profits at the previous high, right? So don't aim for, just put your take profit at the previous high, which is 11.067. And you can use say 2x leverage. You can do it for that. Once it sells, you wait for it to come down again to around this trend line, right? There's another dojo that forms here showing that this one to start going up. What do you do again? And there's something you have to notice. If you look at, if I still click on this and go to this point, you can see this point here. This point here is a previous high of the other one, and this is more like it is acting as a support for the next one that is coming down. So another dojo formed here. When the dojo ended, you buy at 10.119 and sell at what? 11.394, and put your stop loss at the bottom of the doji, which is 9.632. You can keep on doing this. Now what is formed here at this next one is, you can see a hammer here formed again. You can do the same here. Place a trade at the end when the hammer is finished and the candle enter the next one. Place your trade here, right? Put your stop loss at the bottom here and put your take profit somewhere here. And you can actually ride this market until the pattern changes. That is basically how you trade this market. You can see that at this point the pattern changes, right? Now we don't know if this is a general retracement or if it's trying to trend down again, because if you look at this two here, you can see that this is a hammer, but it is red, it's not green. And if you look at the other one too, it is a shooting star. It is more like opposite of the hammer, right? So it is still undecided. It's actually a doji as well, but you will have not taken confidence because we don't know if it is retracing or if it is starting a down trend. So guys, this is basically how you know, okay, where to buy and sell. And of course, if you know this, now when I say buy, I mean going long, right? So just come here and go long because it's a trending market. If the market is trending upwards, if the market is confirmed to be trending downwards, then we can be using shorts, right? But here it's trending upwards, so we use long in this case, right? So here I've shown you how to use this place. So just put your parameters here, then go and trade, right? So what you do now is to just go and search for the market that is actually trending this way. So this is Atom. Always trade coins that actually have very good fundamentals, like Atom, BTC, Ethereum, BNB, and the rest of them, right? Coins that have good fundamentals, these are coins that you should trade. Don't trade coins that have a lot of risk or volatility with regards to fundamentals attached to it. I hope you understand this. Now, if you want to learn more about futures trading and how to conduct technical analysis, I created a course, right, on Sitting Mastery, Volume 2. I explain how candlesticks are formed, their patterns, how they're developed, and how you can trade them, finding confluence with different indicators, how you can trade the ranging market, how you can trade the trading market, how you can trade different types of markets, right? Even the consolidation market. I explain all this in that particular volume. If you want to go into more details, you can go and check out that course. The link is in the description. Now, if you want a special coaching from me and my team, right, and you want to join a group where we'll give you signals on what to trade, what you do is that I'll leave a link to your WhatsApp group. Fill that form, right, and we are going to contact you. Now, we might take some time to contact you because we are doing due diligence, because there are a lot of scammers that want to come to that group and look for a way to scam you. So we're doing KYC and due diligence, so it might take some time before you get to your turn, but surely we are going to bring you in. Do you understand that? Now, say you don't want to trade futures, you want to trade a more, you don't have time to do all this analysis, you just want to copy someone else's trade, or you want to just, set up a trading bot that just trades for you on its own in the spot market. Then watch this next video.